Bank of Canada is meeting yet again on October the 23rd for another interest rate announcement, and it's widely expected that the bank will cut rates tomorrow. And before we jump into this video, I'd love to hear your thoughts in the comments down below on what you think the Bank of Canada will do on October the 23rd. I'm Michael Ouzas. I'm a realtor here in the city of Toronto. If you ever want to book in a call to discuss what's going on in the ground level of Toronto real estate, click on that first link in the description down below. There's been a series of cuts in rate announcements as of late, and it's widely speculated that tomorrow may be one of the biggest cuts we have seen since the start of this year. Let's take a look at what each bank is predicting and then discuss what exactly that could mean for the Toronto real estate market moving forward into Q4 of 2024. This article is on stories.com. It says, where every big bank stands on Wednesday's interest rate announcement. Another quarter point drop is on the table this week, but economists with Canada's big five banks are by and large thinking bigger. And that announcement will come at 9:45 a.m. on October the 23rd. And whether or not the bank will hike, hold, or cut remains some degree of debate with respect to the size of anticipated cut. It is important to note that we have seen consecutive 25 basis point cuts as we've gone on through 2024. Let's start out TD Bank. Either way, rates will continue to head lower. They are forecasting a 25 basis point cuts, although they do mention that this will be a nail biter and rates will continue to head lower. The argument for a 25 basis point cut is that there is still clear strength coming from the jobs market, with wage growth running well above inflation. If we jump down to Royal Bank, they are predicting a 25 basis point reduction to 3.75% overnight rate, which is related to an underperforming Canadian economy, which had already pushed the Bank of Canada lower rates earlier than most advanced economy central banks. RBC is also calling for a 50 basis point reduction in December and reductions down to 2% by mid next year per their base case forecast. Interestingly enough, CIBC is saying that it's tough to argue a 75 basis point cut. Question is more of a gamble. Will the Bank of Canada raise 50 basis points or 75 basis points? I do believe that they meant cut. Well, a mega move isn't in the base case forecast. There are reasons to think that Governor Macklem's team will give such a move more consideration than the 25 basis point cuts that some economists are still projecting. They're not ruling out a 75 basis point cut compared to the 50 basis point cut. But they do go on to say that what might hold the bank back from that step isn't anything happening in Canada, but developments south of the border. Scotiabank is predicting a 3% decline by the spring, which is a cut of 50 basis points tomorrow. Bank of Montreal also predicting a 50 basis point cut to 3.75 this week. Low side surprise inflation is at the forefront of BMO's argument. Going forward, they are calling for a series of 25 basis point cuts, ultimately taking the overnight rate to 2.5%. With all this talk about the interest rate announcement on the 23rd of October, as we're coming into the tail end of the fall market heading into November, it'll be interesting as we move forward on whether or not this will move the needle for Toronto real estate. We didn't exactly see a hopping fall market in September. However, in October, even though we won't see those numbers for a couple of weeks now, we are looking like a 2 to 4% increase in price over last year, and sales up, give or take, like 15 to 20% based on some early calculations, which still remain to be seen, and those are not official as of yet. But just going by what we've been seeing in the current data, we have seen a significant uptick in both sales and in pricing year over year, October to October. If we keep in mind though, in October of 2023, interest rates were in the 6% range plus, a significant difference of where they are today. And these rate announcements, even though they are calling for a lowering of rates even more, that's directly correlated to the variable rate side, which is still higher than where things are on the fixed rate side, which is where most buyers have been getting qualified for when it comes to time to purchasing property. And if we take a look from affordability perspective on the difference between a 4% and a 6% rate, buyers are looking at around a 20% increase in their purchasing power year over year. So that's a pretty significant difference when it comes time to purchasing a property or even considering making a move on the buying side of the equation. It could also play a factor on the seller side of the equation. If you are looking to sell your property, on where that pricing would be today today could change as we move forward into the rest of the year and going into 2025. The third element that's really important to take a look at is the new rules for buyers, especially between that $1 to $1.5 million range. I don't believe this will have a big effect under the 1 million range or even into the 2 million range, but if we are looking between the $1 to $1.5 million range, which is historically a very competitive market in the city of Toronto, those new buyer rules when it comes to down payment could bring more buyers to the table when coupled in with lower interest rates. This will remain to be seen, but we will get more insight into where that stands on the lending aspect of it from all the mortgage brokers in our network, and that'll be interesting to see as we move along. But it could set up for a very early spring market if buyers are now getting approved at lower rates than they have in the last year, and buyers who were possibly prohibited by the down payment but could still qualify for maybe a $1.1, $1.2 million mortgage. These are significant announcements moving forward and will definitely be remain to be seen how things play out heading into 2025. And if you are considering making a move in 2025, I've attached a video right here which you could take a look at to see how you can prepare yourself to buy in 2025. And if you want to book in a call to discuss how you can set yourself up to be prepared when going into the Toronto real estate market as a buyer, you can click on that first link below at any time. I'm Michael Ouzas. Thanks for watching.